All right, let's get right into it. We're about to dive into something, well, something pretty huge. It's a massive financial market that's operating almost entirely in the shadows, and it has Wall Street experts, let's just say, more than a little nervous. So let me just start by asking you this. What if there was a financial market out there right now so big it actually makes the one that triggered the 2008 crisis look small? And what if almost no one can see what's happening inside of it? Yeah, $3 trillion. Just let that number sink in for a second. That's the estimated size of a market that has quietly ballooned into one of the most powerful and, frankly, mysterious forces in all of global finance. Okay, so a $3 trillion giant doesn't just appear out of thin air, right? So where did it come from? Well, to understand that, we've got to rewind the clock a bit. Back to the last time the global economy was teetering on the edge. You remember 2008, right? The massive financial crisis. Well, in the aftermath, regulators swooped in and, they laid down the law. They hit the big banks with a ton of new rules to stop them from making those same kinds of super risky loans that got us into that mess. The idea was to make the whole system safer, but what it also did was create a vacuum. I love this analogy. It makes it so clear. Think of the old school traditional banks like McDonald's. They're highly regulated, everything is standardized, and they have a fixed menu of loans. After the new rules came in, they couldn't really serve those riskier customers anymore. So, who stepped in? That's where these new players came in, these shadow lenders. They're more like your favorite local gourmet burger shop, way less regulated, and they create these custom off-menu loans for companies that the big banks won't touch. This is the world we call private credit. And that local burger shop? Well, it hasn't stayed local, and it definitely hasn't stayed small. It has grown into an absolute behemoth. To really understand just how big, we need to compare it to the very thing that was at the heart of the last major financial crisis. The numbers here really do speak for themselves. The subprime mortgage market that caused that 2008 meltdown, it was valued at about $1.3 trillion. Today's private credit market, it's estimated at $3 trillion. That is more than double the size. But honestly, it's not just the scale that's so worrying. The really crucial point here isn't just about the size. I mean, big markets exist. The real danger, the whole reason it's being called a ghost market, is because we are all flying completely blind. And hey, this isn't just speculation. The very institutions whose job it is to monitor risk in the financial system, we're talking the Federal Reserve, the big rating agencies like Fitch and Moody's, they openly admit they are struggling to find any hard data here. They just can't get a clear picture of what's going on. So why is it a ghost market? The reason is actually pretty simple. All of these deals are done in private, just between the lender and the borrower. It's not like buying stocks or bonds where there's a public record. There's no central reporting system. And that means nobody, not regulators, not other investors, not you or me, knows the true level of risk that's hidden inside this $3 trillion system. The word you hear over and over is opaque. It's a black box. So let's connect the dots here. We have a market that's bigger than the one that caused the last crisis, and it's almost completely invisible. So what's the bottom line? What does this actually mean? This is the key takeaway right here. Look, risky loans have always existed. That's nothing new. But when you have $3 trillion in risk that is completely untrackable and unquantifiable, you have a systemic threat. It's a blind spot big enough to crash an entire economy through. Think about it like this. The 2008 crisis was caused by risks that were basically hiding in plain sight, risks that experts just failed to see until it was way too late. But what happens when the next potential crisis isn't just overlooked, but is fundamentally invisible by design? That is the terrifying question at the heart of the $3 trillion ghost market.